Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools Carl Teal and Keith Spites giving a 1 to 10 rating to a member of Big Pharma. It's Bristol Myers Squibb, ticker symbol BMY. First, we'll rate the strength of Bristol Myers business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Carl's at a 5. Keith, you're at a 6.5.
Yeah, and Bristol Myers Squibb is in a transition period right now. The company is shifting from what it calls its legacy portfolio of drugs that have either already lost patent exclusivity or will soon do so in the next few years. The good news is that Bristol Myers Squibb also has a growth portfolio, and it includes several newer drugs that should be growth drivers over the next several years. The one thing I question about the company's decision, though, on the growth portfolio is that it does include a few drugs that also face patent expirations over the next several years. I'm not sure why Bristol Myers Squibb did that, but if it weren't for the growth portfolio, I would give this company a much lower score on this particular category.
Yeah, and I gave them a 5.0, and I just want to say, I gave some low numbers here, but I don't actually think Bristol is necessarily a bad investment here. I'm just looking at where they are in their cycle, and it's not a great spot. They're already seeing some revenue declines, and it's going to get worse. 2028 is going to be really bad when both Eliquis and Opdivo go off patent. Those collectively account for nearly half of revenue, 47%, I think. They're already seeing Revlimid decline, and that's going to keep going on. So they do have some growth drivers, as Keith mentioned, to make up for that. Some drugs like Camzyos and Cobenfy, Reblozyl. And those are keeping decline so far to kind of a minimum, but that's not going to hold. Bristol's going to see shrinking revenue. Probably for a few years, and I worry that even some of those growth drivers could see some competitive pressures coming on. So honestly, I wouldn't be surprised if Bristol got involved in another mega merger. I mean, the 2019 Celgene acquisition was supposed to address some of the problems like Opdivo going off patent, but it's not enough.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Carl's at a 7. Keith, you're at a 6.5.
Right. Based on stock performance, which is one of the best ways to evaluate management, Bristol Myers management team probably deserves a lower score. But CEO Chris Boerner hasn't been running the company very long. He stepped up to the top spot only in November 2023, and he's really had to play the hand he was dealt. We've talked about several drugs losing exclusivity. That wasn't his fault. He's just having to deal with that, with the ramifications of all of this patent cliff. So I'm giving him the benefit of the doubt on what he's doing at the company. I'm giving him the benefit of the doubt on a recent deal with BioNTech. Bristol paid $1.5 billion up front for rights to the bispecific antibody BNT327. I think that's either going to look like a brilliant move a few years from now or a boneheaded one. I'm basically assuming it's going to look more like a brilliant move than a boneheaded one. But if the bet pays off, this CEO is going to deserve a much higher rating in just a few years.
Yeah, he hasn't been around all that long, but I mean, as CEO, but he has been at the company since 2015. So I really tried to look at what I thought, he had done in his role in management that was important to where the company is today. And one thing is he was very much involved in the Celgene acquisition. And, I just said that it wasn't enough to deal with some of their growth problems, but actually as mega mergers go, it was a pretty good one. I mean, mega mergers in this industry often really underdeliver, but this one, they pretty much hit all their marks on it. I mean, they hit the cost savings that they expected to. Almost all the products they expected to get approved got approved. They really only whiffed in one area, which is that they really underestimated how badly Revlimid erosion was going to happen. So I gave him a 7 because I think that was, when you look back at that has to be viewed as actually a good decision. And that's another reason why I think I wouldn't be surprised if they do another big deal.
For financials, a 10 is a fortress, a 1 is yikes. Carl's at a 6. Keith, you're at a 7.
Yeah, I say a 7 for now anyway. On the plus side, Bristol-Myers Squibb continues to generate solid revenue. They have decent profits. On the negative side, revenue is declining. And the company also has a fairly large debt of over $51 billion. As Carl mentioned earlier, their financial situation will deteriorate somewhat over the next few years. But for right now, I'll say a 7.
And I gave them a 6. I mean, just looking across the industry, they are perhaps the worst positioned pharma company in terms of patent cliff. Amgen is maybe a little worse, but they also are selling biologics, so it's a little bit different. So that just weighs heavily on my rating there. I mean, in terms of their balance sheet, they're kind of middle of the pack. If you look at like debt to EBITDA or something like that, they have a good credit rating. So, and you know, they've made efforts to pay down the debt they took on for Celgene, so that they actually do have some space to make some deals.
Carl, let's move on to valuation. How well will Bristol-Myers Squibb stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
Yes. So this is where I hope I can make clear that, you know, why I think Bristol actually might have a place in some people's portfolios, despite these sort of low numbers I'm giving. I mean, in terms of returns, I said 0% to 5%. You know, just given that we're probably going into a period of declining revenue that lasts for a while, I'm sure they'll try to make up some of it on the cost side, but it's going to be hard to excite investors that much. On the other hand, I gave them a safety score of 8.5. This is a company that has paid a dividend every quarter since 1933. They have almost always raised it. I mean, they've held it steady a few times. I don't believe they've ever cut their dividend. So I see it being essentially a zero chance that this company does not continue to pay out a dividend to investors. And the current yield is 5.4%. So that's pretty decent. So I see it as a almost like a bond proxy with some eventual upside. So even though I don't expect the stock to be a great performer over the next few years, you get this dividend and then hopefully eventually some returns on top of it.
Yeah, I'm stepping out on the limb a little bit more than Carl. I'll go with a 5% to 10% return, probably on the lower end of that range. But I'm not super confident in the prediction. And Carl was very confident in his prediction, and I understand that, actually. So I'm only going with a safety score of 5. The main challenge for Bristol-Myers Squibb is what we've already talked about, the patent cliff, Eliquis, Opdivo, and other drugs. But, you know, on the other side of things, the stock's valuation already has some of the anticipated revenue decline baked into the price, probably not nearly all of it, but at least some of it. And then Carl mentioned that juicy dividend. And I think he's right that Bristol-Myers Squibb will avoid dividend cuts. I think the dividend's relatively safe. And I do think that just interest from income investors could give this stock a floor. And so if you look at a total return with a dividend yield of over 5% and maybe a little bit of stock movement because of the valuation already reflecting a lot of bad news, you know, maybe we could get into that 5% to 10% range.
Let's move on to everyone's favorite topic. Carl, is there a company in Bristol-Myers space that you like better?
So just going through big pharma, I mean, if you were just looking at all the companies and saying, I want the least patent cliff issues, I want the least sort of leveraged balance sheet, I want a decent dividend, Johnson & Johnson kind of stands out. Not growing fast, but they are growing and should continue to grow. But my real pick in the area is Eli Lilly. They do face the loss of Trulicity, which is it's like 30% of revenue or something like that. It's a big drug. That comes in 2027. But Mounjaro and Zepbound, their obesity drugs, already guaranteed they're just going to sail past that and keep growing. They have pretty modest leverage. They have one of the best pipelines in the industry. So the stock's not cheap, but they deserve that premium.
Yeah, and I'll go with AbbVie. This company's already navigated its patent cliff, and it did it very well, actually, with Humira losing patent exclusivity, and AbbVie was really pretty well prepared for that. The company is a dividend king with a very attractive yield. Its growth prospects look pretty good, too, through the end of the decade, so I really like AbbVie.
Thanks to both Keith and to Carl. They've given Bristol-Myers Squibb a fairly low overall score of 6.0 out of 10 without any particular high points. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Illumina. Till then, Fool on.